Hey guys, good afternoon and welcome to Your Stocks. I'm Pavitra Parekh. With me is Ekta Batra, and the markets are recovering a little bit. You have the mid-cap index, which is broken into the green, so that's positive. The Nifty has also recovered a fair bit, so it is still trading with cuts, but just around 50 points over there. And the banks are the real pain point today because the pressure still continues. It is around 120 points from the lows, but Ekta, it's still an over 300-point cut that we're seeing on the Nifty Bank.
Well, yes, absolutely. At this point in time, we have the Nifty Bank, which is definitely underperforming. The mid-caps, which are just about managing to hold their head above the water. So let's see whether there is any kind of recovery which takes place in the financials or whether the mid-cap index loses a little bit of ground from here on. But nonetheless, we have a lot of ground to cover in terms of queries. We have Rajat Bose joining in on the technicals. We have Sharad Avasthi, who's joining in from PCG Research to answer all of your fundamental questions. Rajat as well as Sharad, welcome to the show. Well, let's get going in terms of the first question that we have. We have Anu Agarwal, who writes to us from Gurgaon. She holds 1,000 stocks of Axis Bank, which she's bought at around 951. She's a short-term investor and wants to know what to do with this particular counter, whether she should hold it or whether she should sell it. Well, Rajat, let's start with you on the technicals because it's close to the buy price here for Anu. So what would you recommend?
I would suggest that she should put a stop loss below 925 on closing price basis and continue to hold on, because once 975 to about 990, this range is taken out by Axis Bank, it will scale up to something like 1024 and thereafter 1060. These are the two targets for the next 1 year for Axis Bank. Axis Bank technicals are not all that bad, but now that the market is slightly weak, that's a separate issue. But I would still suggest that continue to hold on till it breaks 925 on closing price basis.
Okay, so hold for now. Sharad, what would your call be on Axis Bank, considering that, this is a short-term investor? Do you recommend to stay invested, or would you, prefer another maybe private bank instead of this one?
No. I think within the private bank space, if you are looking for valuation comfort, Axis comes first to mind. And I think this quarterly numbers, most of the banks have seen a bit of whipsaw because of the asset quality issues regarding ECL provisioning. But I think over the next 1 or 2 quarters, most of it should subside, and next quarter onwards, your advances growth should also look pretty good for most banks across the board. And Axis ideally should trade at somewhere around 2.5 times price to book. So I think my targets for Axis would be somewhere around 1150, 200 on the stock. Even in the medium term, I think over the next 1 or 2 quarters, you should see a lot of re-rating for most banks, both private and public. And Axis should stand to gain most out of it because in terms of price book multiples, it is trading at a discount to some of the larger peers.
Okay, all right, so that's the view coming in on Axis. But let's get in another query now. We have Akash Deep Singh, who writes to us from New Delhi. He holds 15 shares of Godrej Consumer, which he's bought at around 800 odd rupees. So he's sitting on a profit as we speak. Long-term investor wants to know what to do, whether he should hold or sell this particular counter. Sharad, what would you recommend? Because Godrej Consumer, profits were down this time round. They said they're aiming at volume growth and not pricing growth in the future. What is your sense in terms of what earnings could look like for Godrej going forward, and what would it mean in terms of this particular investment?
Yeah, so broadly what we are expecting is that earnings would be, say, 10-12% kind of CAGR over the next 2-3 years. And since like the whole space is trading at a bit expensive valuations, this is also trading at somewhere around 45-46 times. The recent Parks deal that they have done, how they ramp up that part of the business over a period of, say, 1.5-2 years will be a key monitorable. But other than that, I think growth rates would be near to that rate. Rural growth, if picks up in a different zone and surprises you on the upside, that could be a different story. But otherwise, the growth should be normally around 10-11%. And based on that, it is already trading at somewhere around 45-47 times forward. So I think it does not leave much on the table. I would be more comfortable buying Godrej at somewhere around, say, 40 times forward or something, which should be 10-15% lower. So I think Godrej, you can exit from at these prices.
Okay, Godrej, you can exit. Rajat, how is this one looking on the charts? Would you have a similar view, or do you think you should hold for a bit?
No, I would have a similar view. I would concur with Sharad and say that there are technical features which suggest that further downside is very likely. First of all, there is a rounded top formation, which is actually a distribution pattern, and this is a very regular pattern. And minimum downside is the 200-day exponential moving average, which is closely around, say, at the moment it is at 970, but the death cross that is happening between, say, 20-day exponential moving average and 50-day exponential moving average suggests that even 200-day exponential moving average could be pierced. That is, 970 could get broken. So from this perspective, I would say that the medium term also looks pretty weak. In that case, it would be better to exit, because I think he is still in the money, so he should get out of it.
Okay, all right. So that's the view coming in on Godrej Consumer, but we're still not done from the entire FMCG space. We have Jayant B. Paranjpe, who is on the line from Nagpur. He's invested in ITC. Hi, Jayant.
Madam, boli.
Hi, what is your question on ITC?
Yeah, I am holding the ITC shares 2,300 accumulated at an average price of
240.
I want to know the future prospects in view of this current demerger.
Okay, fair enough. Well, sitting on a
Long-term
good...
investor.
All right,
Long-term
sitting on a good...
investor.
Yeah, go ahead.
Yeah.
Okay, got that. Well, Sharad, what would you recommend on Jayant's investment? He wants to know more about what is going to take place with regards to the hotel demerger. There could be a possible IPO separate for the hotel's business, and eventually the value could really be unlocked by 2024, which is next year. So what would you recommend in terms of a holding? He's sitting on a profit at this point in time. Good profit.
See, I think the major run-up that had to happen because of the undervaluation the stock was seeing for the last, say, 3.5, 4 years, I think that's behind us. Now, what you can expect from the stock is market-linked returns. From the current prices, I think the fair value should be around 475, 480 for the stock. And the hotel demerger is good news in terms of sentiment, but if you consider the total valuation of the hotel business, considering what Indian hotels or some of the other companies get, you could be looking at 16,000-17,000 crores, which is not material considering the value ITC already has. So I don't think it's a very material upgrade for ITC that the hotel business demerger is happening. Unless and until the other segments also start happening, that should be a big trigger. And moreover, the way it has been arranged has not been liked by most market people. So I think don't be very greedy from here onwards for ITC. I think most of the cream is over. If you get somewhere around 475, 480, you can think of exiting. If you are a very long-term investor, you can continue to hold. It should be a safe bet. But what I understand is that the dividend yield story, along with the capital appreciation story, is more or less over now. The dividend yields now are not that attractive as they were around levels of 150, 200 or 225. So I think there are many PSUs also available which would give you a decent dividend yield. In terms of ITC, I think 475 is the fair value. So you should gradually think about booking some profits out of it.
Okay, yeah, considering he's made this kind of a gain already on this stock. Rajat, we all have been talking about the kind of big move that we saw in ITC, since the start of this year, or if you look at a one-year chart as well. But the past month or so, if you look at, there has been around a 4% correction. Is there something that bothers you? And, how do you think it's likely to trend from here?
Well, regarding ITC, I would say that it is now in a short-term downtrend, and if it were to fall below, say, 390, then it can actually test 375, and that is a possibility. I would say that ITC is likely to go for a sustained correction, because, see, the hotel thing is already over. FMCG story is already through. Now, there is one particular piece of capital allocation where I'm slightly, I have reservations. That is the opportunity cost of capital of holding, say, huge money, that is ITC has in its books as cash, and that is a pretty big sum. So ITC otherwise generates huge returns from cigarettes and other things. So I would have liked that ITC gives us a special dividend or say a buyback of shares. That would have been much better, because the cash is not being spent, and this is actually the view of a lot of investors, that what about that? Because it is, see, if I can get that money and I can put it into some tech stock or some other stock which is generating much better returns, I could have put it there, and ITC itself could have generated that kind of money from otherwise doing the cigarette business. So why hold on to that cash? That is the problem. Otherwise, ITC is a good long-term bet, but capital allocation still remains something needs to be done about the cash they hold.
Okay, all right. So that's the view on ITC. A little bit of caution coming in there. But Reshma now writes to us from Pune. She has two shares she wants to know about. First, she holds 50 shares of HPCL, which she's bought at around 279 rupees. So just about flat on that investment. And 100 shares of SAIL, the metal company, which she's bought at around 89 odd rupees. She wants to know what to do with it. How long she can hold both these stocks. So both of them, bit of a flattish performance for both of these right now. HPCL and SAIL, what would you recommend, Rajat, on the technicals of both of these?
So HPCL, I would say that put a stop loss of 225. There is a saucer formation on the weekly chart, and it suggests that there could be further upside from here. It could even go up to 335 over a period of 1 year or so. So HPCL is a hold. And what was the other stock? IOC?
HPCL and SAIL.
Oh, Steel Authority, again, I would say that hold it with a stop below 80, because around 80 there is support, and if that support gets broken, then it would go down. Otherwise, there is a possibility that it can again bounce back, and over a period of 1 year, one can expect something like, say, 110 to 110, and thereafter, if it crosses and sustains above that, maybe 120 could also be possible. So, hold it with a stop below 80.
Okay, got that. Sharad, what do you think about both of these, HPCL as well as SAIL? Also, she's asking how long she can hold these. So, I'm guessing this is someone who's willing to hold for a while, you know, if you do think that the upside is significant. So, what would you recommend on both?
I think HPCL is something she should continue to hold for the long term.
Okay.
The way earnings are happening and the way oil prices are slated to be more or less down over a longer period of time, barring short-term whiplashes here and there on the upside, I think a long-term trajectory for oil should be down. Once this normal profit that they are earning because of higher spreads also normalizes, I think the earnings should stabilize somewhere around 50-60 bucks. And they're also doing a capex over the next 4 or 5 years, which is around 70,000-75,000 crores. Over the last 4 or 5 years, they've done a lot of capex. That should also help. I think 50-60 rupees easily you can expect as the number stabilizes. The stock trades at somewhere around 8-9 times. So I think 450, 400, 450 is something she should hold on HPCL for. SAIL, I would think it's more or less at fair value, though the long-term targets are very aggressive for the company. They are talking about a 1 lakh crore capex. In terms of balance sheet, it is roughly doubling the size, but that is still FY 30-31. It's a long-drawn process. Recently, debt, etc. has come down, but we are expecting earnings to be static around 9.5, 10 rupees for the company. And considering 9 times, it's already trading at somewhere around 90-91 times. 90-91 rupees. So I think 9-10 times it's already trading. So SAIL, I think she can exit. But HPCL is a good bet to hold on for targets of 450 plus over the next 18 to 24 months.
Okay, that's very helpful on this query. By the way, the July SIP number is flashing on your screen. It's come in at 15,243 crores. This is an all-time high. It's, anyway, we've been seeing a rise month after month. Last month, it was at 14,734 crores. So it has moved up even more, and it's in the 15,000s for the first time. So very, very solid SIP number. And, all of the experts that we've been speaking to as well say that, of course, the faith of the retail investor remains absolutely solid. And even if you see a little bit of change in money being pulled out of large caps, I mean, the total equity inflow is also a little bit lower, but the SIP investing is rock solid.
Absolutely. And Pavitra, this comes at a time where we have seen a mild correction which has taken place in terms of the markets. We have seen the FPIs pull out money for the past 9 to 10 consecutive sessions. Obviously, this took place before, but there is some amount of trepidation which has come in for the markets. But nonetheless, the SIP inflows, like you mentioned, at an all-time high of 15,243 crores. Well, if we could just get your view quickly, Sharad, you've been tracking the markets for a long time, the fundamentals as well. What is your sense when you talk to your retail clients? How bullish are they? Where is the money going? Is it all being rerouted to a lot of these mid-caps, small caps?
See, there are categories of investors. Those who understand the market a bit, or who are not very adversant to the risk profile of it and who can look at long term. I think they are people who are very happy doing the investments into small caps and mid caps, even through mutual funds. The conservative types are usually still sticking to the large caps in spite of the underperformance over the last, say, 3-4 months. But I think that's very much according to the profile. I think younger generation is more understanding of the equity market culture. I have known friends who have not stopped their SIPs even during the COVID time, and they continued, and they were very gung-ho about the long-term strategy. So I think people now have realized that an SIP is a very good mode to invest for the long term. And thankfully, the COVID-related correction also lasted for a very small amount of time. So that has further reinvigorated the faith. And I think long term, this is still a tip of the iceberg. A lot of more money is going to come in if your urbanization and your per capita income is to grow from current levels to around 2-3 times over the next 5-10 years. I think SIPs are something that are going to be a big gainer over the next 5-10 years.
Oh, absolutely. I mean, this number has been going up month after month, and it looks like, of course, it still makes up a very small part of the total AUM, but it looks like, it's set on the right path, and it will keep on increasing as investor awareness also goes up. But with that, we do need to take a short break. We're going to come back in just a bit and answer all of the other queries that have come through.
Welcome back. Well, still lower for the Bank Nifty by around 300 odd points. We still have with us Rajat, Bose and Sharad Avasthi to answer all of your queries. And those are the trend numbers. Net profit up around 46% on a year-on-year basis. Numbers looking strong. Revenue up around 45% on a year-on-year basis. So the stock, as you can see, is reacting quite strongly to the numbers, up around 2%. Indraneel Ganguly writes to us from Kolkata. He holds 230 shares of Star Health, which he's bought at around 587 rupees, sitting on a profit there. Long-term investor wants to know what to do with this particular holding. Sharad, any thoughts on that? And if you could just share your quick thoughts on Trent as well.
This Star Health is a good story to bet on, and I think in the long term they could continue to gain because the composite licenses, etc., is still some time away. And on the private side, they have a major share. I think they should continue to do very well. In terms of target, I think health insurance is something that is expected to grow going ahead also. The SME segment and the corporate segment should also actually budge in big time. The smaller corporates I'm talking about. I think healthcare is becoming an essential part. I think after COVID, people have started giving it more importance. And that trend should continue with higher per capita incomes, etc., also contributing to that. They have a strong on-ground force of around 200 plus people to handle the renewals, etc. And I think the growth rate should be very good for the company over the next 2 to 3 years. In terms of targets, I think somewhere around 700, 725 would be the fair value for the stock. So you can continue to hold for that target. Trend valuations are a bit stretched, but I think like most apparel retailers, Zudio is an experiment that I think is working very well for the company. and it's like shopping on the street side shops at the prices, but the experience is that of an air-conditioned mall. So I think that is an experiment that has done very well for Trent, and as more expansion happens on that front, I think that could be a very good game changer for Trent. The valuations look a bit stretched, but I think retail is an area where, as raw material prices have come down, they can properly realign their brand positioning and pricing. That should help most retail companies, be it Trent or ABFRL or the others. So that is a positive. The valuations are a bit on the expensive side.
All right, that is the view coming in on Trent. Sharad, Rajat, thank you both so much for joining us on the show and helping us with all of these queries that have come in. We're going to wind down on that note, but remember, if you have any queries as well, anything stock related, write into us and we will ask our experts what they think is the best option for you. With that, we're going to wind down on this edition of Your Stocks. Thank you for tuning in, and we have closing bell up in 2.